LYFT stock, Lyft Inc. It printed a 52-week low of $10.82 at some point in the session of the 8th of November 2022, and ultimately lost 22.91% on above average volume of 8.1 million shares. So there are a couple of analyst notes we have. One of them is the first of them is from Morningstar. It says while Lyft's mixed third quarter results and fourth quarter guidance were disappointing, they continue to see strength in the firm's network effect, which has driven growth in rider monetization. They are also pleased with Lyft's latest cost-cutting measures. However, they continue to expect lower 2024 adjusted EBITDA than the firm guided for earlier this year. They have also lowered their revenue growth assumption for this year through 2026, given the ongoing uncertainty regarding the macro environment. In addition, while they think Lyft will remain the second largest ride-hailing platform in the US, they are now assuming Uber will slightly increase its market share over Lyft during the next few years. They now see Lyft hitting GAAP profitability in 2025, a year later than they had initially projected, as they do not foresee a much operating leverage given their revenue growth assumption. While adjustment to their model results in a $55 fair value estimate, down from $65, they continue to view shares of this narrow mode firm as deeply undervalued. And then the other report is from Argus, and they're saying here in the investment thesis that they are reaffirming a buy rating on Lyft with a price target of $41. The shares have fallen sharply since early April, and the tech sector sell-off and disappointing management comments on driver spending initiatives. However, they believe that the company has turned the corner with its above consensus second quarter results, which included record EBITDA, higher margins, and substantial growth in the number of active riders. They also look for improved daily driver availability and continued growth in ride sharing volume over the remainder of the year 2022, and have significantly raised their 2022 earnings per share forecast. They expect Lyft to thrive alongside larger rival Uber, as they do not see ride sharing as a winner takes all industry. So yeah, given all of that, we can see down here that the stock appears to be consolidating within a longer term downtrend. It seems shares are presently below the 200-day moving average. However, the average directional index, or ADX, is below 20, indicating that shares have exhibited sideways movement recently, and it's also lagging the S&P 500. Momentum is strongly bearish. The 14-period slow stochastic oscillator is falling as investors sell shares and drive the price lower. The volume for this last trading session was heavier than usual, trading 80.955 million shares versus an average of 11.143 million shares per day during the last 12 months. The unbalanced volume indicator is bearish. The slope of the indicator is negative and suggests that there is a lack of buying interest. There is a lack of buying interest, and given all that is going on now, we can pick up this price of this peak of $20.37 that occurred on the 5th of August 2022. Pick it up there as our target, yes, and then pull it down to give us downward projections from there, and also upward projections from where it is currently. Pull it down. So much further than where it is. So put it down. Stop at $8.1. So the upward projections: 12.75, 14.27, 15.66, 17.43, and then 20.35. And then get this: the probability that the price of LYFT or Lyft stock will remain below this 20.35 over the long term, or rather over the next 12 200 trading sessions, is getting the probability that it will remain below that price is statistically 5.16%. So the probability that it will surpass that price is high, relatively high, 94.84% statistically. So this, for some reason, also chimes with the analyst would I say analyst opinion that they seem to think that the stock is undervalued. In the long term, they believe that things will bode well for LYFT. For some reason, it has just chimed with that with opinions of analysts, the analysts we just covered now. So upper projection is from 12.75, 14.27, 15.66, 17.43, 20.35, and the probability that it will remain below 20.35 is statistically relatively low. So the projection is that statistically that there's a good chance that over the next 200 trading sessions that Lyft will spike beyond 20.35. So there's no guarantee that this will happen. Just see what you make of all of these things, and thank you very much for watching this video.